Good turnaround Tuesday, everybody. Hi, Alexander, Richard, Hugo. How's everyone doing today? Want to tip my hat to Blake at that trend line that he bought on a resting order. Great trade. Long euro. And I believe Ryan was too. I didn't expect this much, but this looks like a very important resistance level that we're up to here. And actually, even though the pound is a little stronger, it looks weaker. And I think we're going to take out this 3.5 low. So my turnaround Tuesday trade was to sell this pop in pound. I even did it in euro, but with EG trying to bottom, in my view, the pound is the preferred short here. So we'll see. Okay, Richard, I wasn't sure. Ryan made a great call yesterday when the dollar was acting heavy and it was up here. And I said, well, it looks like consolidation. I sure didn't expect it to, some people could say that we had a false breakout, right? Over this double top. We're back underneath it for now. Not yet. No. I still think even though the yen with the dollar got hit pretty good, I'm looking for a 3 drive in yen. Yeah, it does. I don't know, you could call me stubborn, but I'm still looking for this in gold, 1720-ish. And I'm still looking for the double bottom in silver to be taken out. But, we could have an invasion and we could be off to the races. I'm wrong quite a bit. I'm right sometimes.
As long as you're right more.
Huh?
As long as you're right more than you're wrong.
It's, I'd say it's a little over 50%, So anyway, yes, I use a coin. Yeah, I have a bull and bear coin. I think we should get those for the company. What do you think, Ryan?
Yeah, get a 2-headed coin. You never lose.
Yeah, I was with a commodity firm. They used that for a promo. It was a bull and bear coin. So just flip the coin. But Ryan, what do you think? And I'm also interested in what Kman thinks about this pullback in yen. If you think this is a failing rally and we're rolling over, I remember it felt like that here too. But I thought we'd get a rally to 16, and now I think we'll get a rally to 17. I don't know what maybe. I don't know what's going to move the yen except an NFP. And I saw a Fed governor on. I'm not familiar with him, but he's looking, just for, if you want to fade the Fed, he's looking for a weak number. He's not looking for a strong number. This Friday, he explained, the stats will come from when we were right in the middle of COVID in mid-January. He said,
funny enough, you mentioned that because one of our guys in the room has just put up a tweet to a White House briefing where F.A.C.E, her name is, what's her name?
Oh, yeah.
Said that there was essentially some 9 million off sick when the jobs data was taken. And so it might affect the number. I'm not sure how that works out because, if you were sick and you had a job, you're not going to get classed as unemployed. If you accepted a job but couldn't start because you were sick, you're not going to get classed as unemployed. So I'm not 100% sure how that's all going to work out.
Yeah, I didn't understand that either. But he did say it discouraged people from going to look for work in the middle of.
I think that'll be the clincher if it stopped people for looking for work.
And that great resignation, if the schools didn't open, maybe some mothers had to resign to take care of their kids. So, it's a mess.
It's going to be
anyway. It's just another number.
It just makes it more of a lottery than it usually is, which reminds me, I'll get the competition running up and running tomorrow.
All right. So what do you think of this yen here?
Yeah, I'm not sure whether we're just seeing a bit of a roll off from the end of month stuff. Dollar was well bid into the month end. Is this a bit of washing the other way? Yields, I'm looking at 10-year yields. They're dipping a bit, so we could be back on that bus. Yen generally isn't doing an awful lot. It only seems to be dollar yen that's really moving. The crosses are relatively stable. So it could be a little bit of a washout. We have had a couple of minor comments from Japanese government, talking about how a weak yen affects imports and makes things more expensive. So maybe there's a little bit of chatter there. But again, you'd expect all yen pairs to be hit on that those sort of comments, and they're not that strong as of yet. Okay. So maybe a bit of rollover. Watch the levels. We've got the old favourite 1440, 1450 here. It's a big long-term level, as well as more recently he's been playing ball. So like we like to say, it's either going to hold or it's going to break.
I'm a seller up here if it happens. Right here, sometimes mid-range like this, where it could go either way.
Yeah.
It's okay to, not do anything.
Yeah. We get in trouble if we make a new low.
Yeah. You mean back under these lows here?
Yeah. Back
13.
under there.
Yeah. That would be ugly. Okay. And any comments from you, Kman, if you're around?
No, not too much. There was this Canada guy who is a MOF person overnight saying that weak yen has merits and demerits. But I'm not going to I'm not going to call it a change of tone, but above 115, there seems to be perhaps some internal voices raising, I think likely from the importer community, having to pay such high energy prices, where it's not jawboning, it's just probably just wanting to send out into the market. The yen can move both ways. Yen crosses have not moved that much. They came off just a tad. They were just a tad heavier than dollar yen was just a tad heavier than the rest of the dollars being weak. I wouldn't read too much into it, but for me, it's still going to be for yen at least. It's going to be Friday. Get a weak labor report. Dollar yen may go and retest the 113.5, 113.75. Get a strong one. That would be the surprise trade now, and then yes, we break back above 115.5.
Yeah, I guess really the contrarian trade, when I think about it, in yields is that they've topped, right? Because everyone's looking for higher yields, myself included. I thought we'd get to 2%, and maybe that was it at 190.
The danger for me on Friday is a curve inversion on a weak labor report. That's going to be a danger trade, because a curve inversion is usually quite bearish, dollar versus ultra low yielders, right?
It's also supposed to be a recession predictor. You're talking about the yield curve inverting or just flattening. It already started to flatten, didn't it, after the Fed last week? Yeah. Okay.
And not only that, it's also bad for banks, who we all know are overlords. So they're not going to allow that to happen.
We got a sniff of it. We got a sniff of it late last year, where it inverted it just slightly, which raised some questions about the path of hikes and whether they could be sustained. So this is the sort of thing you need to watch when you're getting hikes down the road, how it's going to affect things in the future.
WTI's just sideways for 3 days, not confirming. I guess it would probably really collapse if there was a diplomatic solution in Ukraine, don't you think? But
Yeah, depends on how much risk premium you think is priced in. Yes, it would. I think it will probably edge lower, but I don't think it would collapse.
Okay.
But yeah, it will definitely not be positive for oil. That's for sure. So
well, I've heard guys say that equities aren't pricing in the invasion at all. So why don't we? The big question here in equities going forward is we had the first wave down, right? So was a heck of a wave, and I guess now the call is, are we going to have a failing rally? I have your levels still right around that 45.5 levels where it really start to accelerate off these, because these were prior highs.
Yeah, I want to give a big up to Blake as well. Yesterday, we were talking about the S&P, and I stuck a buy stop in at 44.52, just on the break up.
Nice.
And it went. Yeah, I'm still seeing it. So that's again learning off of other people and their analysis.
Yeah. So if you had been just at Forex low, even though you had a great community, you didn't have another set of eyes like Blake's eyes are, pretty good.
Yeah.
He's an eagle eye. So
Dale, you said sorry, absolutely good to have them. Absolutely, yeah. I was going to say, you said equity. People are saying the equities are not pricing the whole Ukraine situation. Well, they're not pricing anything, are they? I mean, they just don't care. Any kind of dip gets bought again, which doesn't make sense to me. I still think that with central banks, especially the Fed, telling us that they're going to be hiking and tightening and doing everything, I find it hard to see how yields can stay low. And if yields don't stay low, we know that equities are not going to like that. But at the moment, 10-year US, like you guys said, is lower. It's 175 now. So that's giving a push to equities. But you look at inflation is still high. We had the print today on French CPI, which has been, low for years and years, and it's now 2.9%. And this is the reported CPI year on year, up from expected 2.4. So this is, remember, German CPI was something like 4.6, if I recall. So the ECB this week, man, they have a difficult job convincing us that everything is fine and inflation is not a problem. I don't know when they're going to give in, but at some point, I think they're going to have to start admitting that this is not going to be as transitory as they think it's going to be. So,
I was calling out for you yesterday, and before we had this pop in gold and silver the last 2 days with the dollar selling off, I was going to ask you if you felt good that you were still patient. And every time it starts to rally, I get FOMO. I don't do anything about it, but I don't like it.
Yeah.
I still think that there might be better values here.
I am still waiting. I still think we may test 1680 to 1700 in gold, and 21s, maybe even high 20s in silver. This is where I'm going to add. I have a small position on, but I really want to add a lot more. I'm either going to be adding there or above 26 in silver.
Hey, and good morning, guys.
Hey, Blake.
Hey, I was going to say, silver had a really nice pivot off of triangle support, by the way. It was interesting. I just got an email, like literally 20 minutes ago, from one of the guys that I used to trade with, who, that trades over for FX Macro, and he's actually looking at the silver miners today. And so that what the symbol there is, the
SIL and SILJ.
SILJ. Yeah, he's looking for the silver junior miners.
SLJ.
And I found that kind of interesting, because I was just, well, here I'll
there it is.
Who's got the charts right now?
Me.
Dale.
Oh, okay, here. Let me go ahead and take that over real quick. I was actually just, if you go over to, ForexAnalytix here, and you just, go over to update timeline, so you can see the update that I did this morning for silver, wherever the hell it is. Oh, you know what? I didn't do it in there. I did it in the chat room. Sorry. Here's the chat room. So you guys just scroll up just a little bit. Here's the Silver. Okay. So you can see the silver really hit triangle support, and it's symmetrical, right? And you can see that little, kind of small little false breakdown, below there. Anyway, that triangle support really held. And then ironically, he sent me an email about SILJ and saying, hey, it's, is this a false breakdown? What do you think? And so I pulled the junior miners up and I'm like, oh, hell yeah. I mean, and you got silver, pivoting off of that really key support, as you see here. And off of that, that's gold, by the way, and gold's in a triangle too. Here's silver right here. So I think precious metals can actually spike higher from here. I mean, you look at how the euro and the Aussie have acted overnight. I mean, both of them are getting really, not only just the euro and the Aussie, but then you got the Kiwi and just the dollar just really under pressure in general. So I think it's a good look here, Stel.
Does look good, but for short term, I think the main driver for metals is going to be the March FOMC meeting. Unfortunately,
I think. Look, we got a month and a half before.
Oh yeah, I know.
So we got a lot. What is we got eons. What eons? You're talking long term, and I'm talking about like what's happening in the next 6 to 8 hours. There's a lot going on here, but and I'm sorry I was a little late to tune in today. I just want to say congratulations to those people that have been selling the dollar. I'll just show you guys right here. You got, for those of you that are not in the ForexAnalytix chat room, I'll just give you guys kind of an update of what some of the positioning, taking some profits here in the euro dollar. I've booked a little bit of profits in the Aussie. And so, I've been playing the dollar short since the euro was down here at that trend line and the Aussie, down here. And I will have to admit, I made a mistake yesterday with the Aussie dollar. I thought it was the RBA meeting minutes. I had my calendar screwed up and I was looking at like 2 weeks from now. And somebody said, hey, don't forget the RBA tonight. And I'm like, I think it's the minutes. But then again, I think I was a little hungover because I had, as you guys know, I had Matt, who was in our chat room for years. He was traveling in the United States and stopped by and stayed the night over at my house Sunday night. And we drank a little bit too much whiskey.
Is that a secret?
Whiskey or bourbon?
A little bit of both, actually. Yeah, nice. a little bit of both. So the problem is that I wasn't thinking as clearly as I should have been yesterday, and I didn't realize that it was the FOMC, it was the RBA meeting. That was totally my fault, and I totally spaced it. But anyway, I picked up the Aussie on a dip last night. I had a bid out at 70.40 and we traded just below there to the 30s right after the RBA decision, and we rallied back. So let me ask Kman and Ryan. I saw Kman, you were up during the RBA. What are your thoughts here on the RBA's actions? I mean, they basically stopped doing QE and they're not in any seem like they're in any hurry to raise rates, but the Aussie still is rallying here. So what's your opinion? Anybody? Bueller.
Sorry, can you say that again? I had stepped off for literally a second. What was the question?
No, I thought it looks like Kman's not here. I thought Kman was here. Ryan is here. So Ryan, did you have any opinions about the RBA overnight?
Yeah, they pulled QE, which was being expected. The thing that struck me is that they've ruled out, or they're not saying 2024 or putting dates on potential hikes again. Now it's down to when wages are going to be the main factor in inflation, when that's going to back it up. Nothing hawkish, nothing dovish, but a slight turn towards not being as dovish as they have been on rate hikes. No surprise to see Aussie dollar higher. I'm sticking in my longs, still got my RBA trade on. You know, I was a buyer like most people down below. So I'm sitting and running this one. But yeah, you know, I've been saying for months, the RBA was talking out their backsides with their 2024 rate hike call. And I still believe that to be the case.
Well, you know, the thing is, and I have to say, you know, price action wise, even though I did pull some profits from both my Euro and my Aussie longs that I've been in the last few days, I have to say the Aussie is, you know, that false breakdown below that 70-cent level, you know, that was a pretty big hold. And now anybody who is wanting to be long is going to be trying to buy dips here in the Aussie. Yeah. So, yeah. You know, we get the Aussie back down to 70.50, maybe 70.40 again. You know, you have to imagine buyers are going to be stepping in. Now, one thing I do have to note here about the Aussie, and we should note this, is that we are at the 38% retracement. So, you know, that's something that we should pay attention to today. Because I think one of the bigger risks right now is you have the S&P that's had a nice little bounce. But I want to pull up a chart really quick, and I'm going to ask you guys' opinion here, especially Dale. You've been around the block a few times, and I'm going to add.
He built the block, didn't he?
He did. He was part of the whole. I think he was you know, at the NYSE at the Open grand opening, right?
Yeah, Jesse and Charles Dahl and WD was there. We had a grand old time.
So check this out. So we got the spiders, and you know, we're rallying here, but you know, volume's tapering off on this bounce back. It's still relatively high, but you can see it is like, you know, we had that low was created with that high volume spike there. We are rallying, but the volume is tapering off a little bit in the spiders. So when you get a rally and volume's tapering off, what should you do? What do you guys do? You fade it, right? Yeah, that's what I would typically do. So now, you know, if you're looking at the S&P and we're trading at the 50% retracement, I still think that there is a risk that we can trade a little higher here, but I would be looking for, you know, specific levels to be fading the market. It is Tuesday, and we've had a nice little recovery rally over the last week. But let's not forget, and let's not you know, ignore the fact that
there was a lot of damage.
There was, and we have to imagine central banks are pulling away the punch bowl, right? Period. End of story. I mean, that's the facts, right? So because of that, it's going to be hard for me to see us in this environment challenging these highs. And that doesn't mean that, you know, the S&P is going down to, you know, 3,000 either. That just means that, you know, probably over the course of the next few months, you know, we're going to be consolidating, you know, something like this, you know, as we, you know, prepare for, you know, another rally or whatever the hell. But, you know, one of the other risks that you know, I think there's a lot of talk about, and I'm actually going to get on the horn with one of my more favorite guys to talk to about this here in the next couple of days with Trader Summit. Is, you know, a lot of people are starting to pay attention to the yield curve and, you know, the potential inversion. I mean, I don't think there has been a recession ever without an inversion in the yield curve between the 2s and 10s. So that's something that, you know, we have to pay a little bit of attention to. So anyway, just some food for thought. Do you have any thoughts on you know, yield curve inversion here, Ryan Stelios?
Well, like you said, the yield curve usually inverts before recessions, but it doesn't mean that every time the yield curve inverts, there's a recession coming. But it's a strong signal, and the bond market is telling us this now, that whatever the Fed does, they're going to have to do a 180-degree turn at some point. And I hate to say it, but the bond market guys, they're usually right. So it's a bit of a game of chicken now between the markets and the Fed, because really, if the markets believed what the Fed is saying, and they thought that the economy is gonna, and the equity markets are gonna take it without any problems, I think we should see 10-year US at 3% now, literally. But it's clearly not happening. So, yeah, it's a tough one. If the yield curve inverts, it's bad for banks, and it's bad for stocks in general. So I don't know. I don't have a view, unfortunately, at the moment.
Oh, Ryan, you have an opinion?
Yeah, no, I'm pretty much in line with the other guys and what Kman said. There's a risk that we see that happen on the jobs report, on a bad jobs number. We got a sniff of it late last year. When it went, again, it's questioning the hike path of the Fed. But look, you've got to look at the other side. If this is going to happen for the US, how's it going to affect the dollar? And conversely, what's going to happen to the other currencies? Are we going to see a bounce in all these currencies versus the dollar? What's bad for one is good for another by default.
Yeah. All right. Well, I appreciate your thoughts, and I'm sure everybody does too. I'm going to actually shift the conversation. One last thing I wanted to talk about before we go is what?
Cryptos?
No, I'm going to talk about, I don't know, your toes, not cryptos. Your toes. I want to talk about your toes. No, I do want to talk about cryptos because, as we're seeing this recovery in equities, one of the things that I've been watching very carefully, and if you, again, this is, I'm going to go back over to this information here. If you guys are ForexAnalytix subscribers, even if you're using the light version, we do private webinars throughout the course of the day. One of the ones that we do is in about 45 minutes from now, we do the Morning Edge. And in the Morning Edge, we go through all these instruments, look at their bias. Now, even though that something is like, you look at Bitcoin here, it's a bearish bias, I still play counter trends. So if I know that something's, if I know something's been trending lower, but I'm buying it, I just know I just have to take smaller positions because I know it's going counter trend. So I know what the biases and the trends are, what the key levels that we're looking for that day. We go through all the analysis of all these instruments one by one. Then after that, Steve and Stelios go through other instruments too. But the reason why I bring that up is because Bitcoin, I've been watching very carefully at this 4,000 level. And if we break above that, I don't
40,000.
I said, did I say 4,000? Yeah, I meant 40,000. Yeah, it's this 40K level, or it's 39.6, somewhere around there. But we break above that, and I think we're really going to squeeze. And Ethereum's 2,800. This is a very big pivotal area in Ethereum that, I'm like, okay, we're at the channel. And this is, by the way, this is a setup that we did on the Pepperstone show called The Trade-Off last week. I'm like, yeah, above 2,800, it's bullish, below 2,150, it's bearish, because this is a nice, channel that we're following. And I think you got to be, if you are out there fading risk, like let's say you're out there shorting the S&P or shorting stocks, shorting the Dow, whatever it is, and you see a nice, rally in these cryptos and you start to see them break out. These are still, in my view, the riskiest assets to own, or that's the way investors are going to express, I'm taking on as much risk as possible. I'm going to buy cryptos, right? Whether you believe that cryptos are, a fad or not, or they're really investment vehicles. It is right now in today's environment, it is the vehicle that when you're taking on risk, it's the ultimate risk on, risk off tool. So if you see these cryptos starting to spike higher, you have to be really careful about fading stocks or trying to, short the NASDAQ or, shorting individual stocks, or even playing precious metals. I think precious metals will in some respect go hand in hand with cryptos moving higher. So I'm watching 40,000 and 2,800 basically right where we're at in Ethereum, and maybe, up towards 3,000 or 20, the spike high, right? Or spike low, excuse me, at 29. 100 in Ethereum, but those are the levels that you should be looking for, moving forward. So I just wanted to kind of throw that out there for everybody before. Dale, do you have an interview today?
Yes, I'm trying to make him a panelist.
Who is it?
It's Jean-Francois Boucher.
Oh, well, we should probably
Jasper Forex.
Let's say I'm trying to find them, and you're not able to upgrade them.
Oh, I think you just did.
Oh,
there
no, that wasn't me, but you did it.
All right,
very good.
Okay, great.
So, hey, I want to just really quick, guys, let you all know that we have removed our special pricing that we do, at the beginning of the year. As you guys know, it's now, if you want like the really good pricing, you're gonna have to wait some time. But
Hey,
the good
Blake,
news is,
a couple of guys got a hold of me yesterday. I don't know how you feel about it, but if they emailed the site, would you honor it?
yeah, they have to email. They can contact the support team here. No, not me. The support team here.
Okay.
Max is he's on duty right now, but you can go ahead and contact them. But for the rest of you guys, you can now take a trial. So it's $1 for 10 days, and then you get to try out the full premium version. Jump in the chat room. And I want to point out, this is our chat room, and this is probably probably one of the most active communities. I mean, you can see this is just from when I got up this morning. Let's see, right about that's good morning, everyone. You can see that was exactly an hour and a half ago, and you can see all the chatting just in the general chat room that we have going on, just in the general chat room. Then we have our trades room. As you can see where I put some of my current positioning in right there. You have the Forex flow or the Flowonomics room, where it's mostly just macro, kind of hot, big ideas there. News and research room, Spanish chat room. So you guys come in, check out the chat room. We don't talk politics. We don't talk religion. And
Thank God.
if anybody tries to sell anything, you're actually out for life. And so we have a very clean community where people just talk trades. And sometimes we talk about Netflix shows if the market's really slow. But for the most part, it's just the markets and ideas. So and every once in a while you get some fun conversations in there that when the market's dead. But anyway, we'll see you guys in the community. Make sure you try it out. $1 for 10 days. Dale, it's all yours.
All right, adios, stream team. Thank you
very
very
interview.
much.
See ya.
Thank you. I thank you, guys. Jean-Francois.
Yes, that would be me.
How are you, John?
I'm very well, and you? I think the last time we spoke was like 5 years ago.
On FX Street?
Yeah, on ForexAnalytix.
Oh,
I think
goodness.
it was in your very beginning.
Okay.
Yeah.
So we're approaching 5 years this April. So
I guess
so
that would fall right into the ballpark.
Has anything happened in the last 5 years?
Oh, tons has changed for me. Oh, absolutely.
Yeah, I saw you have a little you have a health crisis going on, and
and so back in 2016 I was diagnosed with leukemia, and so I kind of had to take a second look at things, and right away I stopped trading other people's money. I was focusing on medical risks rather than financial risks all of a sudden. So I had to realign things. But as of late September of 2020, this therapy drug that I'm on has really kicked ass, and I'm coming back, baby. And so my leukemia is not going away, but I've adjusted. I've learned to live with it, and with the meds, everything is well supported. And just as of late, I had a touch of COVID, and so I had to kick its butt. And now I'm back again for the second time. It keeps trying to get me, but it's not gonna happen.
Yeah, I call people warriors for just trading and what you have to go through trading. You're a true warrior, John Francois.
The trading keeps me busy. It keeps my mind off the health issues. It keeps me on schedule.
It's a good distraction.
Oh, absolutely is. And since my diagnosis, I've stopped looking at a universe of things, and now I'm hyper focused on the euro and the euro only.
Okay, so do you want to share your charts? Because
sure, if I could,
a lot of us concur that we're at could be at some kind of inflection point, at least close to an inflection point of the dollar rally terminating.
Yeah,
maybe that was it, but I'm interested in what you're seeing here.
Can you see? You can call me John. Just John.
All right, I'll call you John.
That's what it stands for. And so,
okay.
Can you see what I'm sharing?
Yeah, got to see the moving blue cursor. Yes.
Yeah. Okay. And so, basically, I'm looking at the euro on the 1 minute chart. I also compared that with a 5 minute chart, and all of that starts from a daily chart, which I look at every single day, no fail whatsoever. And so this morning when I came, this is the low of the day. This was the high of the day. And then if I look at it on a closer point of view, I use an hourly chart. And then the move that happened yesterday and overnight took us back to this missed pivot from last Thursday. And so this pivot that exactly. So we were driven back to that level due to that missed pivot, and just above it at 1280 is this month's new monthly pivot, and so we barely tapped that. The missed pivot was at 1262, I believe, and so it took us 3 days to get back to this missed pivot, plus another 20 pips to complete this month's pivot, and now we're rotating back down to today's missed pivot.
Okay, so how would you describe your trading? Scalping?
I try to trade inside the ranges. So this little box that we see here, that's where I do most of my activity. And so I use what's called a price and time cycle. I come to the market to get paid, PAY, potential average yield is what I'm after, right? I come for the potential average yield, and I find that inside this box. Everybody asks, where does this box come from? Well, this box is the potential average yield off of a 5 minute chart. It's one of these potential average cycles. And so we would call that a sigma. And so I take that sigma and it repeats over and over. And when the market moves like this, it moves a multiple sigma. Right.
Does it have any? Is it close to like the only? It's interesting. You use a box. Is it like a Darvis box?
Yeah. So basically, my background.
Oh, I guessed right.
I've been looking at this at these markets since 2006. I got beat up real bad when I first started trading, and so I committed to myself that I'm going to make my money back. And back then, Darvis boxes were the big thing, and so I really started looking at that, and that stuck with me since 2006. And so I've incorporated that into my strategy. But the potential average yield is where really everything comes together, because now I'm looking at time. My box has 3 possible exits, right? And the price could retrace back to the top. I could run out of bars and the price comes out the side, or it just collapses through the bottom. I get more volatility sooner than anticipated. The box represents a potential average move. It's just what the market is willing to give me over and over and over and over. So you'll never see me having targets that are hundreds of pips away when the market is more than willing to give me the same 9 pips over and over and over and over. And so it's 9 pips on the 5 minute chart, and those 9 pips move or execute over 12 bars. If I take those 12 5-minute bars and apply that dimension to a 1 minute chart, it then becomes 60 minutes. My box is 60 minutes long. It's covering 9 pips, but it's taking 60 bars to do it. And so what I expect to see, if it's an average move, I would anticipate price to come in on one corner, take up all of the bars necessary to give me all of the pips. And so I expect it to cross the box, come out the other side.
Oh, and then a retrace right to the box for a
Exactly.
failure. All
Yeah.
right. So, yeah, interesting. I also heard you say something that I talk about at times, and that's narrowing your focus.
Oh, yeah.
I use the example of I knew floor traders that never left the cattle pit. They didn't roam to another meat pit like live hogs or bellies or
Yeah.
go and try and trade currency or gold, and they knew that one market like the back of their hand. Tell me what led to your decision to just begin to focus on one on a few markets.
Originally, my universe was just the majors, and back then I had to phone in for my trades. I had to wait for confirmation. There was huge expenses associated with that, and so I started to focus in more and more on the cheaper stuff, and that led me to the euro. And to this day, I still find the euro is the cheapest place for me to execute. And so I just, since my diagnosis in 2016, my focus, just my memory in general, my meds and all this kind of stuff, I needed to narrow what I spent my time on. And so the euro just became a default to go to, but it's all derived because of cost. I operate as a business and I want to do it as cheaply as I possibly can, right? And so the euro is, for me, was the way to go. It still is today. I don't use any indicators. I'm hyper focused on price and price action, like the pivots that I see on these missed pivots, these levels that are meaningful to other people. I keep them in my line of sight.
Are they based on fibs? What are your pivots based on?
No, it's just the traditional pivot, high, low, close divided by 3. And it's basically the level you would have written down on your notepad when you entered the pit. Right.
Yeah.
And so all that pushing and shoving, you didn't have access to computers. You were screaming to somebody else.
You're plotting point and figure charts too.
So that would cover some of your time aspects, right? Those points and figure charts would have a look at the time part of the equation, which is what I'm doing here with my box. I found retail traders in general tend to skip the time axis. They're hyper focused on price and price moving up and down, and they don't really know or care to know how long it's going to take to happen. And the box gives me this anticipated outlook, right? I can anticipate the market giving me this over and over and over and over. It did it in the past, and it will continue to do so over and over and over. It's just an average standard deviation. And so if my goal is to capture whatever is inside that box, and I do it 2 pips at a time on my 1 minute chart, because it's worth 2 pips per bar. So I have 60 bars that are worth 2 pips inside this box.
Okay.
I just trade it.
Do you teach people how to do this?
Yeah.
I know that you said you're not trading OPM anymore, but so you're mentoring people at this time, John?
I share my skills. I charge basically $25 an hour. It's really, really cheap. It's just to get the people the basic idea that there is a rhythm out there, and if you can pick up on that rhythm, you can execute and exploit. And that's really the gist of it, right? Inside this box, I'm making two pips over and over and over. And then when the price comes out of the box, I must decide what to do, right?
Your broker must love you.
Oh, my broker loves this. And now that I'm using an A-book broker, I love my broker, right? So I'm not being trapped. I'm not being cornered. I'm not being forced into squeezes, and my spreads aren't widening at the last seconds and all that kind of stuff, right? So I'm having a blast. I'm using Global Prime. It's a Australian-based broker. I live in Canada, and so I have access to some different brokerage. But otherwise, I keep my trading as simple as I possibly can. If I put up my statistics, I had some trades open overnight, targeting that monthly pivot, and so you could see that here.
Yeah.
All right, so I was targeting this monthly pivot up here, and then this morning when I came back to my computer, I've been trading it short since then.
I know it's not your style, but do you think that Friday's low, Monday's low was it for a while, or do you think it'll give way?
I think it will give way. I think we're going to see somewhere around 1050, 1100 somewhere, like lower than the most recent low. What I personally think is that their recent high may have been the high for the year. And so back here. So this would have been a week or so ago. If I look at a historical analog of 2021 compared to 2022, last year's high was put in on the 6th of January. This year, we were a week late putting in the high, if that's the case. Okay. And so if we're moving away from that level, I could see lower lows coming maybe early next week, right? And that would be in line with what this Ichimoku outlook, tells me.
Yeah. See, okay, interesting. So you're still looking at, some macro stuff, but
I do my top down.
Okay,
I do a top down every single day. I must look at my daily chart because from bar to bar it does change greatly. And I'm only here operating as a business from 8 a.m. till about 10:30. I open my business doors and I close my business doors every day. I stop trading every day. That allows me to hold on to my profits.
And, right? And which bedroom did you set your office up in?
It's right next door to my regular bedroom, so I don't really have far to go to.
I like the commute, John. I like the commute.
Oh, so do I. I used to wake up so afraid to look at the computer. When I swing traded, I was so deadly afraid of looking at the computer and wondering what kind of mess I was waking up to. Now that I've tightened my game and I stop trading every day, I operate as a business. That allows me to sleep like a baby, and I restart the business in the morning fresh. I just reopen my doors and off I go for another couple hundred pips, right? And
we're getting a question from an attendee. What moving average are you using?
None.
Yeah, none. I don't know why they're asking.
Yeah, I don't use any moving averages. Okay. I don't use the indicator you see at the bottom is an ATR, and it's just giving me an idea of what my bars are worth. And so the reason I stopped trading at 10:30 Mountain Time, basically lunchtime New York, is because after that, my bars are worth less and less and less. I'm working overtime for less and less money.
So you're trading the lunch hour rush. Before lunch hour, people
before lunch hour,
breakfast.
I'm trading from the New York open to the New York lunch hour.
Okay.
And so I skip event risk altogether. I sidestep the news. I wait for about an hour, and then I approach the market. What was normal before the news is now normal again after the news. And so my boxes before the news will remain the same size after the news. During the news, price whipsaws through the boxes. It throws my boxes out of whack, right? But the average, if that's what they're asking about, the box size comes from this. And so it's really, really simple. It's grade 4 math. If I come at 8 o'clock in the morning every day, right? If this is 8 o'clock in the morning right here, I look to my left. I want to see what was happening in order to anticipate the same kind of thing going forward. And so if this is 8 a.m., I'm going to look back to my left. I'll see a leg that moved 25 pips, and that may have taken 4 bars to execute, and then 50 pips over 6 bars, 25 pips over 8 bars, 50 pips over 10 bars. If you average the bars, you get an average 7 expected. And then if you average the pips, you get 37 expected. And so going forward, an average box should last about 7 bars and give you about 37 pips according to this sample. And so if you get all of your volatility early in the box, this is a signal to add to your trade because you have time remaining. If you get a portion of what you anticipated, this is also a signal to get the hell out of there because you're also making a lower low. A lower high. So the next thing all
together.
Exactly. The next thing should be a lower low, right? And so if you also fail, then you can try and try again. Eventually you'll find that support, you'll move your box, you'll get your 37 pips. And so it's a matter of logic, logistics, and using probabilities against
and discipline.
Yes, absolutely, absolutely.
Yeah.
I think the cancer diagnosis drove me to acquire that discipline I needed. It's no, I have to take my meds on time. I have to attend my appointments on time. Everything about my life had to do about time all of a sudden. And so,
what perspective did it give you about pips and money?
It's not as important as everybody makes it out to be. If I focus on my process, it's the end result. And so I just need to I just need to keep focused, right? If I keep my head down to the grind and I keep grinding at it, I will get what I want. And it's just a matter of realizing if I get a fail, if I get a loss, that might be the beginning of a series of losses. So I need to adjust to that. I can't just double up my size to make it back. That's foolish. I should shrink my size.
Right.
I should shrink my size, right? And so exactly. I think I've been through the mill a few times.
I mean, it sounds like you and I, but that's how you learn. I mean, don't we learn the most from our mistakes?
Oh, yes, absolutely. And the journaling part of things is a big bonus.
Bingo.
I was journaling before the cancer diagnosis, and now with my medical stuff, I'm also journaling that aspect of my life. And that's kept up, I think, my upbeat attitude and this kind of stuff. So it's keeping me grounded, and waking up in the morning, I put 2 feet on the ground. I do my mental inventory. I check from head to toe. If I'm all there, I'm good to go. And I'm super thankful every day, right? And so the money part of things is just a byproduct of my attitude and my focus on the process. And there's no need for indicators. If you have one high probability tool, just keep reusing it. Right. And what took me a long time is to figure out the tools in my toolbox. I had a toolbox. It was full of money. I didn't know what to do with it. And so how do I spend those instead of approaching the market expecting one trade must equal one outcome? I broke up that trade into a Brazilian little trades. And now I have lots and lots of tiny positions that equal one outcome. Right. And so I give myself the opportunity to seek the level that I need in order to profit. If I thought this was support, I was obviously wrong, and I was wrong, and I was wrong. Right. I was wrong many times, but I never gave up on my bias. I never gave up on my conviction. I just kept trying and trying. I accumulated drawdown because these are all mini lots. By the time I'm all said and done, I've got 1 or 2 lots on the go. But they're all going to the same place, right? So it really pays off in the end, adding a conviction into your bias, but you have to have that bias. And so for me, that comes from this top-down analysis. And I do that every day, no matter what, never fails. That's how you get to see these missed pivots. And then all of a sudden, when it's Wednesday, Thursday, Friday, you start building into this position, knowing that a high probability target like this very seldomly gets missed. Right.
John,
and so
what a great interview. What's the best way for people to follow you? At Jasper Trading on Twitter, is that the best way?
There's Jasper Forex pretty much everywhere. I'm on all the platforms, but my website has a contact me page and all this kind of stuff. So the jasperforex.com website is probably the best place to go. And then from there, it's just, sending a message and I get back to you. But I did do a couple of interviews back in November with another trading friend of mine, and my calendar blew up since then. And so I've been really busy on all fronts. But the strategy is really simple. I don't have anything to sell. I just sell my time. And I'd rather set the elevator back down, I guess is what they say. And so that's what I'm doing. I'm sending the elevator back down.
There's one thing about learning. You're also inspiring, and you're a trader philosopher, Jean. And,
I've accumulated a lot of little tidbits along the way. I've been wrong along the way more often than not, and so I started my career in the hole. Like I started applying what I thought I knew which obviously was the wrong stuff to begin with. But I applied it to options right out of the gate, and it just destroyed me. And I committed to make that money back. And so it's taken me eons. It's taken me years to make that money back. And I'm glad I stuck with it. I'm glad I stuck to my guns, because now I get paid handsomely every day, right? And it's not painful. I'm not hurting anybody. I'm not, damaging the environment. None of that stuff. I do my thing for a couple hours and off I go live my life. Right?
Living the dream. Jean-Francois Boucher.
Yes, that's how I ended up living in a
you went through a night. Yeah. Oh, you live in a national park too?
Yeah, I live in Jasper, just outside of Edmonton. It's a big ski town in the winter time, and then in the summer months, it's mountain climbing and that kind of stuff. But it's we see about
by beauty.
Oh, absolutely. I'm sure I'm in the Rocky Mountains, and so I have beauty all around me. I have about 5,000 local residents, but we see about 2.5 million visitors per year. And so it's busy all around me. I keep to myself. I've been living a COVID lifestyle since my diagnosis in 2016. So everybody around me has been really, really helpful, keeping me going, keeping me alive, making sure I don't get sick. And then just recently, when I did catch COVID, Omicron, I felt so bad. I felt like I left everybody down, and that really made me commit, even more to coming through this.
Well, forgive yourself for a virus that you have no control over.
Yeah, so, exactly.
You know what I mean? And anyway, it was enlightening, inspiring, and some great pearls of wisdom in this interview. I'm not going to let 5 years pass before this happens again, John. I appreciate your time, and I probably told you this 5 years ago. You're my trading warrior brother. If you get to
yes, you did. That's what's kept me coming back. I listen to you guys and ForexAnalytix. I also follow along on TradeGate Hub, so I'm listening more than I talk. I'm a very quiet person. I don't really post much of my own content.
Yeah,
I don't like to argue with people.
You've liked a few of my interviews on
yes,
LinkedIn
absolutely.
and stuff. Yeah. Well, John, I'm going to get back to you. I want to thank you for your time, and so glad you've had this breakthrough and l'chaim, which is Yiddish to life, John.
Yes, absolutely. All right. Likewise.
All right, buddy. So everyone, hope you enjoyed John, and you can see this. It'll be posted on Twitter, and this will be on video. So,
excellent.
All right. So that's a wrap. People are thanking you, John, and I thank you too. And I like the way you have a nice business. You only have to work 2 hours a day. Nice job.
That's the goal.
All right, buddy.
Thank you.
Good hunting, and thank you, John.
Yeah, thanks. Bye.
All right. So everyone, that's a wrap. See everyone tomorrow. Okay. Good luck in your trading and the team. If you're a member, you're welcome, Hugo. We'll be ready for the morning edge in 17 minutes. Okay. I'm glad you guys enjoyed it. That's our job, is to build up and edify traders every day. Looks like John has that in common with us. And I'll see everyone tomorrow. Don't just count your pips, count your blessings. Adios.